Hello, everybody. This is Noah and John, and we are both from UrbanDigs, and it is Friday. So you're going to get your weekly and yearly Manhattan market update, John. It's going to be a whole episode full of stuff right here. Good stuff. Let's get right to it. The stuff that's dwindling. Manhattan supply, 5177. It's getting closer to that four handle. Show me that chart.
I mean, it really is falling here. No, that's down 6% from the week before. I mean, it feels like there are 5 units left for sale across the city right now. It's just supply is very low.
It feels like there's 5 units. I mean, this has been going on for a while, and we're at this holiday season, right? Of course, we got the holidays coming up. So who's listing? Right? We're telling people to consider listing. Who's listing? No one's listing. And that's probably going to dip into the fours before this is all said and done. Crazy stuff, John. Let's move over to Manhattan demand pending sales 4484. Johnny, show me that chart.
Yeah, so this is a different story again. This is actually up again. So here we are. We have a week before pretty much everything gets really, really quiet. And we're still, ticking up almost 1% in terms of the pending sales number.
And that's happening in the face of swiftly declining supply. So that is an interesting dynamic to keep into account together. Let's go to the weeklies and see if we see anything going on there. I'm looking at 1 week supply, 124. That is clearly holiday level stuff. Johnny, show me that chart.
It's holiday level stuff. And I'd like to thank the 19 or so people who've listed recently. Every little bit helps here, but it's still, it is holiday level stuff. But no, if you take away and you look at where we were last year, remember the momentum after the reopening in Manhattan really got started at the end of the year. But we're still roughly about 20% ahead of where we were last year in terms of what's coming on the market this week. So it is slow, but it's a little bit faster than it was last year, interestingly enough.
Right. That is interesting enough. Let's put it into perspective. As opposed to contract signed, which is showing 245. And I know that's down on a week-to-week basis, but the fact that that is 245 at this point in the year during the holiday season is incredible, John. Show me that chart.
Yeah, you're right. So it is down 6% for the week before. But if we're going to continue that year over year analogy, if you look at contract signs where they were last year, we're just talking about how strong new listings are this year versus last year. Contract signs no different. They're actually up almost 22% where they were at this point last year. So that strength and momentum that you saw last year is actually built and is continuing again into 2022.
Yeah, and I just want to point out, if you take a look at the market pulse, which is taking into account both supply and demand metrics at the same time, that is going up, and that has been going up. And we are now at the highest level, I believe, since this whole thing started. I believe we got to 0.85 or so back in the early fall. But this is definitely quickly a supply constrained pulse situation, right? Demand is still very high. Supply is just falling as a result. Put those together, and that's what's going on, Johnny. Let's move on. Let's go on to the annual year in review. Let's take a look at what's going on. Let's slice and dice and break it all up, Johnny. First, let's take a look at how many new listings came on the market in 2021, and how does that total compare to the previous years? Johnny, what do you see here?
Well, it's clearly the highest year we've seen since 2008. And, the previous record was 2018, and we're about 5% or so higher than that. So it was by any measure a heavy year for listings. I mean, plenty of stuff came onto the market this year, even though we've been talking about supply challenges and we've been talking about the need for people to list in the holiday season because there is not enough supply. There was plenty of stuff hitting the market this year, Noah.
Yeah, and I mean, it doesn't make sense, right? Here we are saying that there's so much stuff coming on the market. And it's like, what are you talking about? There's a supply problem. Well, it's not just about supply, Johnny. We got contract signed, we got off markets, and we're going to get into that. If this is annual new listings, then this is annual contract signed, right? And whoops, let me take that off there. And if I draw the same line that I did over there, we are just well above even the best years, 2013, 14, 15. 2013, I didn't even realize this. 2013 was the year to beat, and we're well ahead of that. So,
and we beat it by like 20%, and we doubled the amount of contracts signed last year. I mean, that's just okay. 3 months we're sort of went to the pandemic. I get that, but still, the fact that we doubled it, I mean, that's impressive.
Yeah, well, you add these two together, 15,000 from 21, and you add 7,000, 7,300 over here, you get what, around 22.5, 23,000. That's going to equal about 11,500 a year. So if you put them both together and normalize it, kind of a thing, you're starting to get above this level. We're below peak levels, but you're kind of at the levels we were at 2000, above 16, 17, 18, 19 in terms of deal volume. The point is this market is liquid.
Mhm.
All right, this market is liquid. That there is a bid for the market, John, right? I think the biggest misperception that's going on right now, and it could be because agents are not conveying the proper message to their clients, is that it feels like it's 2015 because of contract signs so high and supply is going low. And I think we have a chart somewhere over here that I want to show here. The annual market matrix, John. The
Yeah.
annual market matrix. This is basically just taking all the new listings, that's green, okay? All the new listings by the year, then all the contract signs, that's red, and we got all the off markets, that's yellow, right? Because
Mhm.
it's not just about what's coming on and what's going off, it's about also the off markets, contract
Right.
signs and actives. And when I look at this chart, all right, there's a lot of stuff going on over here, right? We know that we had record levels for new actives, but when I look at this chart, take a look, let me get rid of this. Take a look at this area right over here, okay? Take a look at this. And the spread between the yellow and the red, all right? Spread
Right.
between the yellow and red, because all these dots are below the green. All these dots, so like this new listings is the most. That's the highest number. But take a look at that spread and now look at the spread right over here,
Yeah.
right? Whereas when the market was deteriorating, it kind of, the spread looked totally different. And I want to point out this red level, this red dot, this contract sign, it was only below, right? It was only below off markets twice.
Mhm.
It was only below off markets twice, meaning demand dropped below the level of off markets. And that was in 2009 and 2020. And it's interesting when you think about that.
It is interesting. And we used to have, the super fans may remember the old UrbanDigs volatility index in which we really were tracking. One of the things we were tracking is off market. And one of the things that happens in off market in times of fear is off market rises. And it rose very,
Yes.
very sharply from 2007-ish into 2009 with the credit crunch. So it's interesting here that even though the market feels like peak activity level, so if you're certainly a buyer, it feels like you're just caught in the middle of things. Off market, Noah, is going sideways, which tells me it's not really peak, because that would sort of, you'd expect that to come down as people just want to move their stuff. But the fact that it's hanging out is an interesting fact. I don't know what to do with it, but it's interesting.
I don't know what to do with it either. In times of stress, and I'm glad you brought this up, off market will rise. Like off market's like the missing, the missing child. It went away and no one saw it for a while. No one looks at off market. You know what I'm saying? It's like no one looks at him.
It's like on the milk carton. Yeah.
Yeah, it's missing. It's, they forgot about it. It's like, oh yeah, I remember him.
Right.
You know what I'm saying? It's like, I forgot. I never looked. That's what off market is. I don't know why everyone's so down on it, but it's an interesting metric. And in times of stress, off market will rise. Just as you mentioned, right? Because why would off market rise in times of stress? Because sellers, and let's define off market. Off market in this case is listings that were active on the market, and then the brokers changed them internally to POTM or TOTM, permanently off the market, temporarily off the market, and then we're measuring it off market. So we're measuring the pace of off market. And in times of stress, when sellers can't get their bid, they will go off market. When the market's good, right, off market tends to go down because sellers are getting their bid and that listing is going into contract. It's not going off market. And here we are, it's doing nothing. As you said, it's been going sideways for 4 years. And I would love to hear, if any agents have any thoughts on this. I would love if you could reach out to us or just comment on this YouTube in the comment section and say what you think is going on over here. But it's interesting, it didn't move up or down.
Yeah, very interesting. But what's interesting is, to go back to what you're saying earlier, if you look at that spread between off market and contract signed, that's really what's driving that feeling of the peak. And I'm curious if because that relates to our market pulse. And so yes. I'm curious how, if you want to go back in history, kind of get a sense for how that feels, what that looks like.
Yeah, so you go to UrbanDigs, you go to the market pulse, and that's exactly right. Because what the point of those arrows, let me just go back here. The point of showing the spread of where we are now versus history is to say it kind of feels in the market like this period of time, right? And the UrbanDigs market pulse is just another indicator that we could use. And when I sit here and I look at this, I just want to, two things. We are breaking the highs that we hit earlier this year. Yeah. And earlier in fall, probably from the summer, et cetera, into the fall. We are now at highs. So that's that mostly inventory driven going down, right? But you draw that line across and look at this. We are at 2015. And that's confirmed when you look at this kind of spread of market activity. You can see it in the UrbanDigs Market Pulse, which tells you it feels, when you look at supply and you look at demand and you look the urgency and the feeling out there, it feels like it did back in the peak of the market. But prices, John, prices are certainly not back to that level. And that's where I think the discrepancy is coming. And let's just go take a look at that really quick. I want to go to prices and take a look at annual resale condo price per square foot. All right, this is a good segue. Mm-hmm. Take every single sale, right, in 2021. This is what I did, every single sale, 2021, put it in a bucket. What is that resale condo price per square foot? Take a look. Take a look at where we are. Let me get out of black over here. Take a look at where we are. Okay, we are at 1340. So you can see we're up from the COVID lows, but we're kind of like 2019-ish levels. Mm-hmm. So that's, I think, the misconception or the misperception that's going on is it feels like 2015. It feels like peak activity. But when you look at where the bids are in terms of relation to price action over time, we are not at 2015. We're actually more like 2019, Johnny.
Yeah, I totally agree with you. I think there's one caveat I'd make, which is to say that really the market caught fire, especially in the luxury sector, the last quarter of the year. I mean, it was going gangbusters too, but November for luxury was just off the charts. So I think we still have a lot of outstanding sales that were booked in 2021, which are going to close in 2022. So even though if you look at what closed in 2021, we're at 1340, I think 2022, you might see a pop in that number simply because we have a backlog of sales waiting to be processed. And a lot of those are luxury sales or
I think you're right.
Over 2 to 4 million. Yeah.
And let's think about with the market pulse at 87 right now, let's think about all the deals being signed today. I mean, this is where attorneys have critical information, right? We'd like to maybe do some interviews with them. And this is where agents have that really the critical information. They're seeing it. I mean, I wonder, are they seeing more urgency? Are they seeing higher bid action? Are they seeing bids coming over the ask? And how is that going to reflect on the next 3 to 4 months going forward? And when I translate this bar chart showing annual action into a linear price action chart, it looks like this, John. And I think you're completely right. And if I were to break down this chart for just a minute, I mean, this is a great COVID bottom. Okay. You see, we didn't really start to go up until, right around this point right over here. You could see the rebound. You could see how we're back to 2019 levels. It's another confirmation right there. All right. I mean, for every seller that thinks that we're back at the peak, we're just not. Okay. And it also shows that we're kind of coming down a little bit and price action's lagging. So this is not going to be reflective of today's market. This is going to be reflective of a market 3 to 5 months ago. And that makes sense. If you think about it, we're kind of coming off the summer highs, and the bounce we're seeing now is not going to get reflected until time comes in. And that's kind of where I think prices are going to go.
Yeah. And I think if you're trying to do a comp right now, or you're trying to do a CMA analysis, it's going to be a little bit tricky because you're going to be caught in between deals that have closed in one period of time, which is 2021, and deals that are pending and are going to be closing early in 2022. So you're going to get some conflicting information there. I think it's good to know that there's a lot of volume behind the numbers coming. So be careful, I should say.
Yeah, I mean, well, there's a lot of volume, so that's going to always be good for price discovery. All right, and let's just give you some idea of where negotiability is. Right, let's shift our annual review to listing discount from original ask, which is the black bars, right, and then listing discount from last ask, which is the red bars. And this is back over time. And I mean, look, this is kind of where you think about, your buyer and putting bids in and all that kind of stuff. What it's worth, but this is kind of where 5%. 5%. Mm-hmm. Sellers are going down 5%. And if you think about the fact that sellers reduce their price and then there's a negotiation, right? If you're wondering what that negotiation is from the last ask, it's 2.9%. 2.9%. And I mean, this chart perfectly exemplifies what we have been through over the last 10 years, in my opinion, when you look at it, Johnny.
Yeah. And, if you look at those numbers, 20, even 13, 14, 15, 16, mm-hmm. I mean, look at that discount from last ask. So, right, maybe you had a price cut, but you're still getting 99%, 99.4% of your last asking price. And that really talks about a market that's really, really squeezed on the supply point of view. So We are not quite there in terms of listing discount, but from the supply point of view, it does feel like it. So no, I wouldn't be surprised to see these
Yes,
listing discounts continue to drop into 2022.
I agree with you. And that's the point of what I'm saying. That's the point of this whole thing we're summarizing, is that like when I had to think about this and all the other metrics that we're looking at and put them all into play here, it feels like, again, I feel like we're somewhere in the 2010, 11, 12, I don't know, somewhere before we had that little bump up in price action from 12 to 13 to 14 to 15. That's what it feels like to me. And I would not be surprised to see those listing discounts continue to go down as the months come on. Very interesting, Johnny. And I just want to point out one more thing. We've been talking about this inventory shortage or inventory net deficit situation, right? You could see it in supply. I want to go back to UrbanDigs. I want to go back to our charts. I want to show you guys supply, okay? Because at the end of the day, all of these moving pieces end up being right here in supply. And when I look at that chart, like, you know, when you think about what people feel in the marketplace, John, you know, the last year, like what the market did over the last 12 months, that's how you feel, right? And we have been going down steadily, and we're now taking the elevator south right over here. And this is the level to look out for. And those levels are, where is that? That's in the fours. Anything in the fours heading down to the threes. Okay, you get to that zone. Anyone that was doing business in 2013, 14, 15, Donna Olshan loves to refer to that period as the golden era of Manhattan real estate, will know that that era was defined as very few inventory and very, it was tough to do deals on the buy side, quite frankly, because there was a lot of buy side competition and there's a lot of euphoria on price action. So, I mean, sellers reached up for it and buyers were chasing it. And that's what kind of drove that price increase over the 2-3 years to peak.
Yeah, and I think it's honestly, we're not that far away from it. I mean, it looks like on the chart that we have a ways to go, but if supply doesn't really come in, and we're not expecting a lot of wave of supply until February, really. I mean, that's the next expected wave if seasonalities return to the market. But if you look at the number of contract signs, I mean, if we're still doing close to 300 a week during the holidays, that number is going to fall a lot quicker than a lot of people expect.
That's what I'm saying. Like, I mean, at some point you're going to see a constraint in contract signed if inventory completely goes that way. And this is another visual representation. Let's do another annual chart here. Let's look at the net inventory, John. The net inventory. So this is taking a look at all those moving pieces, all the new listings coming on, minus the listings going off market, minus listings in contract. The first note is that every single year is negative, and that's normal. The question is just how negative do we get? And this really puts it into perspective of why we're talking about it. We need this to go the other way, Johnny.
That's right. And I don't think it's going to start switching directions until, again, February, March.
Yeah, I would agree with that. Great stuff, Johnny. Thank you so much for pulling up those charts. That is John Walkup. I am Noah Rosenblatt. We are both from UrbanDigs, and this has been your annual Manhattan market update. I hope it was helpful. If you guys have any questions, please just visit our forum. Go right down here. And if you want to see this report, you can get it right over here. Other than that, this has been your annual Manhattan market update. Have a great, happy, and healthy holidays and New Year, and we'll catch you next time.